Hi Matrix, welcome back to another one of our lessons. So today we're going to continue on page 217, which is income tax. Okay guys, remember our section, our taxation and exchange rate. So we're going to learn how income tax works, how much tax should you be paying, and what does it mean to be paying progressive tax in South Africa. Okay. Right, so I'm going to read on page 217. So income tax is an important form of revenue for any national government. It is a tax that is charged on all income and profits received by taxpayers. The income tax system includes many other types of tax that are levied by governments. Taxable income is the gross income of individual or business minus allowable tax deductions. The government offers rebates, amounts that can be deducted from tax, to all taxpayers. These are listed at the bottom of the table in the extract of the SARS document below. These tax tables can change every year and therefore published annually. The table shows the rebates and the taxes charged for the year 2012-2013. The taxable income in the first column of the table is the annual taxable income. The calculations that follow use only the most basic concepts for tax calculations. Okay, so basically what they're saying is that all income that we earn we have to pay tax on it. Okay. The government also offers tax rebates, saying that, well, we'll forgive you this much tax or give back so much to you when you pay so much tax to us. They're kind of giving you a discount on your tax, so to speak. Okay. Also, there's different categories. Pensioners get a bigger rebate, or they get a second rebate. Okay. All right, guys. So what they also say is that SARS can change these tables every year, and often, I don't know if they change them every year, but I've seen these tables change quite a lot. I remember maybe, I don't know, maybe 8 years ago, there was a bracket of income where you could earn up to 80,000 Rand and not pay any tax on that. Okay. Now, if you look from anything from 0 to 160,000 Rand, you have to pay 18%. I mean, that's huge compared to nothing from before. So yeah. All right, cool. So guys, let's go through the rates of tax table quickly. I just want to explain how it works. And then we're going to go into the worked example on the next page. I'll explain how the different categories of tax work and how we calculate it and use the table. And then you guys are going to do exercise 3 for homework using the tax table on page 217. And then tomorrow we're going to get into tax deduction tables and IRP5 forms. An IRP5 form is something that your employer gives to you, which summarizes how much tax they've been paying on your behalf and how much income you have earned. Okay, so we'll talk about more of that tomorrow, but first let's go through rates of tax, which is for the 2013 year of assessment. Okay, so the amount of employees' tax to be deducted from remuneration paid or payable to employees is calculated on the balance of remuneration. Remuneration is just the amount they're getting paid, the total monies that they're receiving. After taking into account the deductions listed below and the allowable medical scheme fees, tax credit rebate in respect of employees below 65 years of age. Okay. So what they also allow is that if you are paying a medical aid, they will allow you to deduct that amount from the tax that you owe to the government. Okay. Why do you think that is? Okay. What is the point of doing that? I mean, the government is basically saying that, hey, you were going to pay tax, but if you not paying this tax, I'll allow you to pay it for medical aid, or rather, I'll offset your medical cost against the tax that I'm charging you. Okay. So the reasoning behind this is that if, let's say, you don't have medical aid and something happens to you, they're going to take you to a government facility where the government is going to be liable for the costs that it costs you to put in the hospital, to pay the doctors, to pay the nurses, to pay, to get all the materials needed and so on. Okay, so the government would pick up that cost, and they are thinking, rather than, let us give you a break, you get medical aid and you don't congest our already exhausted or strained hospital system that we have. Okay, so that is the idea behind this scheme to allow you to deduct your medical aid, and they give you certain amounts per dependent and per person that you are allowed to take off. Okay, obviously it's not a huge amount. Okay, it's I think it used to be a lot more before than what it is now, but still it adds up to deductibles that you're basically getting more money. Okay, so for the people below 65 years of age, so allowable pension and or retirement annuity fund contributions. So these are allowable deductibles. Allowable premiums in terms of certain insurance policies. Allowable contributions to the registered medical scheme in respect of persons over the age of 45. Or is that only now to age of 45? No, there's still there's still a tax threshold applicable to individuals, excluding the allowable medical scheme fees tax credit. Okay, I wonder if that only now applies to pensioners. All right, let's continue then. Allowable donations made by the employer on behalf of an employee. So that's pension donations, or rather donations. Pensions we already had. And then it must be noted that the medical scheme contribution deduction for employees 65 years and older is still applicable. Okay. So the next part of the table shows us the statutory rates applicable to individuals' use. So for people like you and me, if we earn any income, this is what we need to pay. All right, so the way these tables work, or the way they've been designed, is as follows, right? Let's say I earn 200,000 Rand, okay, a year. So that would put me into the second category. Do you see on the table there? Second category is from 160,001 Rand to 250,000 annual income. So if I earn 200,000, that puts me in between those numbers. So that means I'm in that category. So I go across and it says, I have to pay 28,800, which is the amount for the previous category. Okay, remember, South African tax system is in tiers. Okay, so the first 160,000 you earn, according to this table, you have to pay 18% of that. The more you earn above that, you pay now 25%. Then the next bracket is 30%, 35%, 38%, and 40%. I think currently it's been raised to 45% as the highest tax bracket. So the more you earn, that extra chunk of money that you earn is going to get taxed heavier. So let's say you're in category 4, you're getting taxed 35% on this extra money. If you get a raise, it will put you into category 5, and there you're going to pay even more tax on that specific amount. Okay. All right, so let's go back to our example. So let's say I earn 200,000, so I have to pay 28,800, and that amount comes from multiplying 160,000 by 18%, okay? Plus 25% of the amount above 160,000. So I earn 200,000, so above 160, that would put me at 50,000 in that bracket. So I would say 25% of 50,000, which would be 12,500. So my total would be 28,800 plus 20, what did I say? 21,000, no, I don't remember now. But anyway, the point is that depending on the tier, you pay a fixed amount to account for the previous tiers, and you pay that tier's bracket percentage on the amount above the certain threshold. Okay, and they'll tell you exactly what they're talking about. Right, let's continue. Tax rebates applicable to individuals are. So now this is the money that the government is giving you back. Okay, so the primary rebate is 11,440. So that they'll give that amount back. So you work out your total tax contribution minus that. If you're a person for above 65 years or older, you get a secondary rebate of 6,390. And if you're also above 75, you get another rebate of 2,130. Remember, this is of the total tax burden that you have to pay. Okay, tax threshold applicable to individuals. Okay, persons under 65 years, 63,556. Persons 65 years and older, 99,056 Rand. And persons 75 years and older, 110,889. Okay, and then medical scheme tax credit for taxpayers under 65 years. Sorry, this is for under 65 years. Sorry, previously I thought it was over, that it was just for pensioners. No, it's for everyone. Okay. All right, guys, so let's continue to the next page, which is the worked example on page 218. Okay. So you use the above rate of tax tables to calculate the following. Number one, the tax payable on the annual salary of 125,000 Rand for a 37-year-old lady. Okay, so first we have 125,000 Rand. If we look on our table, that will put us in category 1. So she's between 0 and 160, which is exactly what she earns. She pays 18% of each Rand. Okay. Okay, so they said, okay, 125,000, 18%. So she earns 125,000. We multiply that by 0.18. Okay, remember, how do we go from percent to decimals? Divide by 100. 18 by 100 is 0.18. Okay, if we multiply those two together, we should get an answer of, let's see what they get, 22,500. Okay, we can check that. I've actually found some answers that were incorrect in the textbook. So let's quickly multiply that out. 125,000 times 18% equals 22,500. Okay, that's what we got. All right, so her annual tax burden is 22,500 before you get any rebates and anything like that. Okay, so that one was pretty straightforward. It was straight in bracket 1. You just multiply by 18% and you're done. Let's look at tax payable on annual salary of 375,000 for a 60-year-old man. So now we have 375,000. Okay, so we go to our table and we find in which category we have 375,000, and that is category 4. Okay, we go to category 4, go across, and it says that we have to pay 80,100, okay, plus 35% of the amount above 346,000. Okay, so what is that amount above 346? Well, let's subtract out of this. 346,000 equals 2. Okay, 75 minus 46, I think it's 29,000. 75, yeah, 29,000. All right, and they say, so on that amount, which is above 346, it's 29,000, we're going to be paying 35%. Okay, so the total tax equals 80,100 plus, okay, well, what are we paying? We are paying on this amount, so we can say 29,000 multiplied by 80, no, not 18%, 35%. So that's 0.35. Okay, so it's the fixed amount for that bracket plus the amount that's over the threshold of the previous bracket, which is 346, which is what they told you, times the rate in that current bracket. So if we work this out, and they do it for us, they seem to be correct. So we get 90,250. Okay. So now this is his annual tax amount that he needs to pay to the government. Okay. Now, if we look at question 3, it says the monthly tax contribution of the man in question 2 above. So now we need to actually work out what is this guy or this man paying per month. So he's getting a salary. How much of the tax is going to the government per month? All right, well, we know what is the total tax, 90,250. Okay. Now, from that, he's allowed a primary rebate. Okay. Is he a person above 65? No. So the primary rebate is 11,440. So we subtract that. Okay. Is he allowed anything else? Okay. I don't see there's medical scheme. They didn't tell us anything about medical scheme. So I think that is that. So that total would give us 78,810. Yeah. So that's his annual tax burden. And now if we divide that per month, divide that by 12. So 78810 divide by 12 equals 6,567.50. Okay. So on the salary that he's making, he's paying 6,567 Rand 50 cents to the government in the form of tax every month. Okay. All right, guys. So what I want you to do is do exercise 3, which is on page 218. So exactly the same idea. Go through the tax table on the previous page and answer the questions. Okay. If you guys get stuck, look at the worked example. Look how they've done the different tiers. They work in exactly the same way. Identify what tier you're in. It's the fixed amount plus whatever goes over that tier. So whatever amount they give you, take your total income, subtract that amount out, and you'll know what portion is left over in that bracket. And then you're going to multiply that portion by the rate of that bracket and add it to the fixed amount. All right, cool, guys. Do exercise 3, and we're going to continue with tax deductions tables and IRP5 forms tomorrow. Cheers, guys.